So you want to know what's happening in the national housing market, and are the headlines doing more to help or hurt when it comes to what they're sharing with home prices, mortgage rates, foreclosures, and this potential recession that a lot of people are talking about? Well, stick around, because on this edition of Keeping Current Matters and the National Housing Market Update, I'm going to cover all of that. And normally, not quite a t-shirt guy, I'm also going to cover why mindset matters a lot right now when it comes to your real estate decisions on selling, buying, or investing. Thanks for sticking around. I'm Justin Martin, bringing you the National Housing Market Update. Keeping current matters, as I know that's what matters to you and most people looking to make a decision when it comes to selling, buying, or investing. Now let's dive right into why does mindset matter a lot right now. Is historically, over the last 30 plus years, people have sold and purchased properties wanting to make a good decision during a market, but the reason was not the market. The reason were serious matters like diapers and diamonds and death and divorce. So obviously the reason why we bring you the context to what's really happening in the market is so that way all those serious things in your life and why real estate is important, you can use those as the key motivation for making these decisions and then timing things appropriate using the information that we share. So we'll dive right into what is happening in the national housing market. And as you can see from Doug Duncan, chief economist of Fannie Mae, on a quarterly basis, home prices rose a seasonally adjusted 1% in quarter one of 2023. The fact that prices rose slightly in the first quarter is evidence of significant pent-up mortgage demand despite ongoing affordability constraints. Now, the good news about most Americans is that when there are constraints, we find a way. And so as affordability is an issue, there's still a lot of people making adjustments and taking advantage of a lot of programs available to help make home ownership more affordable. Now, what does he mean though by stabilize? Is home value declines stabilizing is from, as we look at January of 2022 to February of this year, we saw an immense amount of appreciation month over month from January all the way through June. And as you look at then what happened for most of the nation from July all the way until January of this year is we saw depreciation. But you can see the rate of depreciation was nowhere near the rate of appreciation at the beginning of the year, as well as over the past couple years. And so across the nation from January and February, as well as working with many people across the nation, each and every state is seeing even different numbers, many much higher, just like our state here in Colorado. Since January, we've seen several percentage points, not just a percentage point like the national report here. But as you can see, all across the nation, we have experienced now these declines stabilizing and seeing home price appreciation start all over again. So what does that mean? Well, the year over year headlines are going to show numbers that are different, but the month over month, meaning the current market that we're in and the market that we are projecting in the future, includes home price appreciation, meaning they're going back up again. Now, if that number would have continued to decrease or accelerated at the rate it was decreasing, we would know that it had not stabilized, normalized, or we have gotten through the correction, which is normal to go through in any real estate cycle. As you look at Andy Walden from Black Knight, just 5 months ago, prices were declining on a seasonally adjusted month-over-month basis in 92% of all major U.S. markets. Fast forward to March this year, and the situation has literally done a 180, with prices now rising in 92% of the markets in February. So this complete 180 is just to share that's very safe to say that the real estate market has corrected, normalized, and stabilized, and now we are on an appropriate rate of appreciation, but do know that home values are continuing to rise. As you look at what does that also mean is that the forecasters are going to start changing now their year over year projections. So you can see the March report from last year, we're looking at negative 4%. Now we're looking at the April report, negative 1.2% when we look at a year over year change in home values. That number will continue to adjust as we start to see these month over month appreciation numbers happen. Now also remember that each state is a little different from what really really happen in the year over year appreciation or depreciation numbers as well. Now, what's really important to look at though is that overall, what is happening in inventory and foreclosures is taking a lot of the main attention of the headlines. What we need to do though, as you can see from the slide, is uncover the facts. And the facts, when you look at any market, is rooted in the inventory or months of inventory to dictate what it is. Remember, greater than 7 months is a buyer's market. A neutral market is about 6 months of inventory, and a seller's market starts at less than 6 months of inventory. As you can see, as a nation right now, we are still under 3 months of inventory. Locally, we're still under 2 months of inventory. In fact, as you look at this time last year, many places were at less than 1 month of inventory. So we still are in a seller's market. You have to remember though, we have gone through a correction. And so our mindsets as buyers or individuals is obviously cautious, most likely with our money. So it may not be a mania seller's market like we experienced in the past when most people did not have reservations to any level of purchasing homes when rates were so low. So now people are cautious with their money, but the buyer demand is very strong and it is a seller's market. So sellers should not be rushed or forced to sell. You should be selling at an appropriate value. Now, as you look at the attention we were talking about, though, is our headlines helping or hurting? And when you're seeing headlines like U.S. foreclosure activity continues to climb in Q1 2023, or you're seeing other ones like more Americans are losing their homes as foreclosures on U.S. properties rise, U.S. foreclosure filings jump 22% and repositions hit highest level in 3 years. Well, again, all these headlines popping up are doing a lot to hurt because when I see these taken out of context or not being an expert, what is our understanding? And for most of us, our understanding is exactly what it says, that it would be bad news. But the reality is it's just statement of fact news. As you can see, from 2017, 18, 19, all the way down to 21, we saw the lowest amount of U.S. properties with foreclosure filings in 2021 that we have seen in the last 30 plus years. So yes, of course, this year they're on the rise as they are rebounding to a more normalized market. You could see the average from 2017 and 19 was 598,000. While right now we're still short 273,000 from a normal amount of foreclosures in a traditional market. And again, the headlines obviously did not show this graph going all the way back to 2005. And so again, as you can see underneath that 100,000 U.S. properties with foreclosure filings, as you look at what is happening in the first quarter of 2023, it is extremely low, so much so that we haven't seen these numbers since 2005. Now, the U.S. foreclosure activity continues to climb in Q1 of 2023 is a reality. There are people that are going to foreclose on their property. And as you can see from some of these stats, there were 95,000 of them. As we look at a total of 65,000 started the foreclosure process, which nationwide, that means 1 in every 1,500. And lenders repossessed only 12,000 homes or properties throughout the foreclosure in Q1 of 2023. Now, do we ever wish for anybody to go through bad experiences? Absolutely not. However, the challenge is people will go through them as there are situations that does have to happen. Now, as you start looking at Realtor.com's explanation, there's no reason to panic, at least not yet. Foreclosure filings began ticking up in late 2021. And again, this was the moratorium was enacted to help a lot of people in COVID-19. And when you see what happened in overall home value and equity gain in 2020, 2021, 2022, is that many of those people were able to make it through this process and are in a great position. The challenge is where is our mindset as we move forward? A mild recession starting later this year with the recovery over the subsequent 2 years is what we need to start summarizing and speaking to, is what happens to a housing market when we go through a recession. And for a lot of people in a recession, our mindset is bad, whereas in the housing market, you have to remember is that real estate is usually what leads us out of any recession. So let's look at historical context to the Fed meeting back in March, given their assessment of the potential economic effects of the recent banking sector developments. The staff's projection at the time of March meeting included a mild recession starting later this year in 2023. So if they're declaring, we believe we're going to see one in the latter part of this year, and a lot of people are talking about that, well, what exactly is a recession and how does that impact real estate? Let's dive into it. The National Bureau of Economic Research defines a recession as a significant decline in the economic activity spread across the economy lasting more than a few months. How long does that last? Not quite sure. Now that GDP is real income, employment, industrial production, and wholesale retail sales. Now, the one challenge is that no matter what market we are in, people will always need housing, whether that be renting, purchase, as very few are actually homeless. So as we start looking at, though, then how would housing be impacted by a recession? We'll dive right in. Bank rate during a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy, which is what we were expressing around most recessions are recovered or we come out of it because of housing. It also typically leads to more affordable mortgage rates, which leads more opportunity for home buyers. So if we've been going through these last 9 months with an immense amount of people waiting for the rates to change, is where we probably have some pros and cons to the recession and how it impacts housing. So here's the pros. There's less competition, there's lower prices, and people lower the rates. Now, the cons is that sometimes there's stricter lending requirements, but that's been going on for quite some time. There may be fewer options available as less people are transacting. The biggest con, but it's also could be a pro, is your economic uncertainty around your own job. If you know that your job is very stable, well, then there's a ton of pros of buying and selling during a recession. And here are a couple of them. Remember, a recession does not mean falling prices. The last recession that we saw a 6% gain. Prior to that, as you start looking at 1, 2, 3, 4, 5, 6, at the last 6 recessions, we've seen over a 5% on average appreciation rate, because 2008's recession really was a mortgage crisis, not a real estate crash. The mortgage crisis was the fact that most people did not have equity in their homes, and I'll cover that fact here in a moment. So as we start looking at, well, what else does a recession mean is falling mortgage rates. As you can see, those last 6 recessions, in every single one of them, we saw a decline in mortgage rates. So the good news is those that get ahead of everything right now can take advantage of a lot that's happening. And with good predictability is that they can refinance when the rates go down, or they can continue to wait and play out the market if that makes sense for their decision making. For these motivators we were talking about earlier on why real estate always matters no matter what market we are in. Now, to close today, you can see this is an angel oak tree. I didn't know it before I learned about it in Charleston, South Carolina. It's been around for about 400 years. The extensions of these branches go out about 25 feet, but the roots are about double that underneath, meaning that the root system is about 50 feet wide. And that's the foundation of why this tree has withstood so much natural disaster. We are going to go through economic challenges time and time and time again. The real estate market, though, really is the strongest foundation in the housing market that we have seen, most likely over the last 30 to 50 years, if ever. What I mean by the strongest foundation in the housing market that we've ever seen is the current rate on existing mortgages you can see here is 80% of them below 5%. 50% of mortgages are below 4%. In 2008, people were walking away from their homes because they owed more than the home was worth. At these rates, people could not walk away from their homes and go rent something for the same payment. So people are going to fight to keep this mortgage payment, which is a great sign for the housing market, as well as from a foundational perspective. This is where it just gets ridiculous. Americans are sitting on a tremendous amount of equity. If you remember, at the height of the mortgage crisis, home values dropped by about 30-ish%. Right now, 67% of people have their homes completely paid off or have at least 50% equity. 40% own their home free and clear in America. Almost 1 out of every 2 properties actually don't even have a mortgage on it. So as we start looking at the root system or the structure, the foundation, we are set up so well to endure really any economic challenge. And housing is probably going to be the safest investment for anybody as you look at with good predictability of scarcity, demand, and a lot of that is because the lack of supply of housing that's continuing to compound and not be available as more people migrate, more people come, more people are born, and more people generally need housing. Why this matters so much is our mindset is going to help lead a lot of your decision making to invest, sell, or buy in real estate because it's the right thing for you to do long term. Short term, why we do this market update Estate is to continue to help you and your family make the right decision by getting trusted information that is accurate. And as you have followed our updates for several years, if you followed the updates, you'd be in a great place right now financially with all of your real estate investment decisions, because we're always going to keep you current, because that's what matters to us. Whether it's good news or bad news, we'll bring it all the same, so that way you can make the best decision for your family. And we look forward to being a part of helping answer your questions and advise you along the way. As always, if you want to schedule a 15-minute strategy session to talk about your own real estate needs, reach out, let me know. If you're anywhere in the nation outside of Colorado, let me know and I'll connect you with the top 1% all across the country to help you navigate your real estate questions and your home needs. From me to you, have an amazing month, and until next month, we'll talk to you soon.